Hey, welcome to Sarasota for a Living, where we teach you everything Sarasota. On this podcast today, we have a great friend with us. We met at a conference for real estate. His name is Jared Prevost. Hope I got that right.
It's close.
It's close. say it again so we have it right.
Prevost.
Oh, you just told me too. Prevost.
You know what? However you pronounce it, if you got,
You've been called worse.
I've been called worse. If you don't call me late for dinner,
nice.
we're fine.
nice. So it was great because we have a couple agents on our team, and they invited us. One of the gentlemen invited us up to see a show in Tampa, which you were at.
Yep.
And we kind of crossed paths on a little bit of a break, and I deal with a lot of investing myself. I deal with a lot of investors. I kind of got into understanding wholesaling and stuff through my investors, and I started going to shows and started to learn more about it. And then we meet great people like yourself that kind of help people understand how to finance these things, because it's not quite the traditional way. But there's always a way, right? And and you guys kind of fill the gap over the traditional stuff and blend it in. So why don't you give us a little story of who you are and how you got where you're at, or whatever you want people to know about you, and we'll kind of get into some more detailed questions.
Yeah, of course. I'll kind of just kick it off. I know when we were just chit-chatting beforehand, we were talking about what's important to us, right? And in the lending space, like, I absolutely love lending because I have freedom of location. I'm really busy, but flexible. Right. As far as my backgrounds, that's originally why I got interested in real estate. I had a legitimate fear of having an office job.
Yeah.
And I knew I was not like a tradesperson, right?
Right.
Always crushed it in school, really loved learning. So I was always trying to look for that way that I can loving what I do and also having freedom of time and travel is always super important to me. So I got started with a mentor of mine. He was a college professor that I had freshman year that got me into business, got me into econ, got me into finance. That ended up not going well at all. Got kicked out of that business. It was in Grand Rapids, Michigan. Was originally living in a mansion for free. Like, it was kind of crazy.
Pretty cool.
And I came down to Florida, joined a couple of buddies of mine, Nick Camarada and Gabe Apple with 27 properties. They wholesale deals in Tampa.
Okay.
And they go as far south. We've done Sarasota deals. So I got into the wholesale space and was with them for a year and a half. And, I really wanted to prove that I could make it. It's pretty low success rate, honestly. But after doing it for a year and a half, man, I was like, I don't really like this.
Yeah.
Like, the relationship building is kind of tough. I don't really like the clients that I'm talking to. You always got to be grinding. You've always got to be available to run appointments. And so meeting actually a buddy of mine who ended up funding a flip that we partnered on together. He'd been planning in my ear, like, hard money lending. And eventually got to the space where I was like, I'm ready to try it. And ever since I got into it, I've been loving it, man. And
how long have you been doing this now?
I accepted the job with Rain City February 1st.
Okay.
So I've actually been very pleasantly surprised with how quick of a start I've gotten this business. Yeah. And that year and a half of wholesaling and building relationships, running a community meetup in Tampa, just at the time it did very little for me, but now it just had crazy.
You realized, it's kind of good that you came from that side, because kind of like stuff I started wholesale, you kind of already understand their pains.
Yes.
And now you're on the other side of trying to say, okay, how can I solve some of your problems as a wholesaler or a flipper or anything else? So it's nice to be on that side of it, even if you didn't particularly like doing it that much, but you understand their pain and how to come to help them,
Right. Well, I've been on the wholesale side. I mean, I closed a wholesale deal a couple of weeks ago as well in Spokane, actually.
Okay.
I've been on the flipper side. Got one flip. It's we're supposed to close on it in like a week.
Okay.
And been on the hard money side of it. So when I'm dealing with clients, I know everybody's perspective in a deal except for title. Never done title stuff. So that's, a bit of a mystery for me still. But I have that perspective, and it makes me so much better of a lender. And when I'm working with my borrowers, it's just I know how to negotiate against wholesalers. I know when they're BSing, I know when they're being truthful, I know what to expect versus what not to expect. And so I'm extremely grateful for what I've learned in the past.
And there's so much more to go. Kind of as we get this, we'll kind of probably circle back around, but,
sure.
can you kind of explain maybe what a hard money is? So we do traditional real estate, we do investor real estate, we do some little bit different things. Maybe for the people that, would want to know, well, what's the difference between a hard money loan and maybe a traditional loan? What are maybe the qualifications, or kind of maybe an understanding what it actually is?
Yeah. I mean, they really couldn't be more different. In all honesty, they're essentially an entire, like, they're both mortgages,
right?
But they're totally different ends of the spectrum. I think it's always good if you're someone asking about it, like kind of thinking about it from the perspective of like a lender. Okay, so hard money lending, we're talking about basing your loans just off the asset, right? Hence why it's called hard asset. House is a hard asset, doesn't move, doesn't go anywhere.
Gotcha.
Care much more about the deal from an investment perspective as a flip or potentially turning it into a rental than like something, hey, can you afford it? Like, that's not the question.
The numbers have to work with the house or the property.
Yep.
First and foremost.
So if you're a traditional bank that's, mortgage broker, you're asking questions about like affordability.
Right.
My questions are, is it a deal?
Right.
So it's a completely different approach to financing.
Right.
So like as a hard money lender, if someone mentions anything about they're going to live in it, their family's going to live in it, I'm like, yo, you're talking to the wrong person.
Okay.
All non-owner occupied, non-QM, which just means non-qualified, right? Like you don't have to qualify, and we're not even a bank. Like we're a non-bank lender.
Right.
I don't really like the term private lender,
right?
Because I think that's like hard money lenders kind of labeling themselves more favorably.
Right.
Like,
we are, right?
Exactly right. Like we're not, an uncle who's lending out of their 401k or whatever, So
that's cool. I kind of got into that space also. I'm a YouTuber, and most of my business comes from YouTube, and we talked about it in the past, and most of my team members are too. I went to a YouTube podcast show 4 or 5 years ago in Orlando. We were in a VIP spot. We met a guy, Ricardo Rosales. I want to get you his information because he's a very big networker in the wholesale space. I mean, he actually runs a really good show they got coming up in May. I've actually spoke at the show before about YouTubing, and he's the kind of one that got me an understanding podcast and how to do it, how to get the information, how to do all these things. And I'd recommend to anybody who's getting into wholesaling go to his shows. Sure. I think a basic VIP ticket's like $500 or $600.
Sure.
They do some amazing things there. You got like 40 of the most best investors in the country that come there. I got to meet Jorge Valdez, which was leader of the drug cartel back in the 70s and 80s at the show. And we did a charity event and go to his house and vet him. So the connections you make, and it's kind of like what we did in that show, the connections you make to get people doing this thing already to really help you speed up the thing, or your process. You kind of already hit it, but if I want to do hard money, what are some of the top questions that I should be paying attention to? You kind of already hit it because it's a different loan, right? But is there some special questions? It's like, Marius and myself, we're going to go ahead and start buying stuff. Yep. What should we ask you or be asking even for the deal?
Yeah. And honestly, that is a really great question, because what I've found, and it's been surprising to me, like most people don't really know a lot about hard money lending, even investors.
Right.
I know wholesalers who have done hundreds of deals and really like kind of only basically understand the high level stuff. And so when I get people that, how it is, like they're shopping, I can tell they've got their pre-written list of questions that they want to check off, and they got this list of questions from Bigger Pockets or something.
Right.
But they ask the wrong questions.
Right.
The 3 questions that I always get is like, hey, what percentage of the deal can you fund? So in hard money, you're going to hear the term loan to cost.
Okay.
Which cost refers to purchase price plus your renovation.
Okay.
So if you buy something for $100,000 from a wholesaler, right, this includes the assignment fee,
right,
and then you plan on doing a $50,000 renovation, your total cost basis is $150,000.
Right.
When people talk about 85%, like you need a 10% down payment or 15 or 20, they're referring to a percentage of cost. So that's one of the questions that people ask. It's a good one. There's nothing wrong with it. You should know that. The other question I get all the time is points. What's a points? And I'm like, it gets so much attention, but I think it's like not really the most important term.
Right.
Because like you'll get lenders that are like, oh, no points, but then they have all these hidden fees, and it's like, what's the difference?
Right.
Man?
Just lay it out to me,
Yeah. And if anyone's not familiar with points, that's just a percentage charged against the loan principal as a fee
for setting the loan up.
Exactly. Yep. Exactly right. Just a financing fee. And I get the other question is like, what kind of interest rate? Which is fine. Like you should know that.
Yeah.
But the couple of questions that people don't ask that they really, really need to ask that, in my opinion, are more important terms. Two in particular is Dutch versus non-Dutch.
Okay.
Are you familiar?
I'm not.
Got it.
I should know.
You should know. Well,
we're going to learn today.
You'll get something out of this. So, okay, imagine this. Like you're doing a big deal, huge rehab. You're buying it for $200,000.
Right.
And you got to sink $150K into this, plus get all these permits approved.
Right.
So you go to lender A and you don't ask if they're Dutch or non-Dutch, and you find out they're Dutch. So what does that mean? Well, that means when you borrow the $200,000 plus, some percentage of that, right? Say 90% of the $200,000 and all of the renovation. Now you're getting charged on that full amount from the time that thing closes, even though you touched none of the rental funds, and you can't even touch them until the permits are done.
Right. So you could be 6, 8, 10 weeks or longer.
Oh yeah. Where you're just paying on money that's not even in your account. Like it's literally in a different account.
Right.
The lender has it. You don't even have it.
Right.
So versus a non-Dutch lender, like we are non-Dutch, which is by far, I think, one of our best selling points, because not many lenders are willing to do it.
Okay.
But in that same situation, where you got this huge reno fund and you got permits to get approved, I'm not going to charge you any interest on the reno funds until you actually do the work, request the draw, and then get those reimbursed to your account.
Okay.
So you're not paying interest on it until it hits your account.
Until you ask for it.
Exactly. So if you were to look at like post reno completed, exit the project, let me look at my financials. If you looked at all your financing fees, that's probably going to be the biggest difference. And I don't think I've ever been asked, hey, are you Dutch or non-Dutch?
Right. And it sounds like it's one of the most important.
Oh, it is big time. And so for me, the challenge is like, I have to talk about it all the time.
Yeah.
Because it really is one of the most important things and people don't know about
it.
It
Could kill your deal because you just got all that money you're sitting on and all of a sudden it's just eating you up.
Tell me about it. That's I've got multiple people who are like, oh, I now understand. Like after they've done, it takes them doing one hard money lending deal where they're held up with permits where they're like, oh, I understand that I need to ask about this.
Oh my gosh, man. I just had that happen. A partner and myself lent $40,000 to a couple guys that have been doing this for a while.
Sure.
And then they're almost done. They're going to make $150,000 on the property. We're going to get our, $10,000 for lend them money fee.
Yeah.
And then the county comes out and there's like a power pole that has to have it totally done. And that just shut the whole deal down. Right. And they were like 3 or 4 weeks, they end up losing the deal. And, they're working, we're all good. And, we're getting the money and everything, but you would think they would expect it, but it just came out of nowhere. Right.
Yeah.
And they've already done like 30 or 40 flips. They know what they're doing, and then that snagged them. And then, they had different money out from people, but
it's wild. Yeah.
That's crazy. The
last term that I think people really need to ask about or ask their hard money lender is like, actually, what is the term? What you'll find is most lenders are going to start at 6 months.
Okay.
And it's like, you should be able to get out of like a simple fix and flip in 6 months. The market's slowed down quite a bit, especially depending on your price point, right?
Yeah. And location, yeah.
Exactly. But if you want to go to that same lender who's like bragging about how low their points are, and in reality, they're like a half a point less.
Right.
And you go, well, I want 9 months.
Right.
It's like, okay, extra point. I want 12 months. Okay, 2 extra points. Whatever it is. We do everything 12 months, like no matter what, just to keep it really simple, and we don't charge extra points for it. And so that's something that people don't ask. And it's not until they have to start paying extension fees that they realize like, wow, 12 months is a good idea to mitigate risk.
Yeah. Well, it's good. You kind of led right into the next thing is kind of like the fees. So like, Mars and myself always looking at things. So say everything works out and we've done our homework and we got the deal laid out to you the right way. And we say, man, my guys are killing it. We're going to be done in 7 months. We got everything done. Is there a fee? Is it automatically you're going to pay for 12 months, or is it like cut off shorter because you got done quicker, or, how does that work out?
Yeah. I mean, as soon as you're done with it, there's no prepayment penalty.
Right. Okay.
So you're just done with it. The one thing that is a downside to doing a 12-month term is you've got to get insurance for builder's risk and liability coverage that matches the term.
Okay.
So typically these policies, especially if you have a good agent, it's a standard deal. I can't remember the term right now, but if you pay them, like you get out of the insurance policy early, you get reimbursed.
Gotcha.
But it does increase your cost to get into the deal a little bit, right? Because you might pay, let's just for numbers' sake, $5,000 to insure for 12 months. And if you had a 6-month, it's $2,500.
Right.
Or whatever it is. Right. So that's one thing to consider. And sometimes that surprises people. They're like, this insurance is outrageous. And I'm like, we'll cut it in half. That's probably when you'll be done.
More than likely, yeah. Unless you just don't know what you're doing. And I mean, I shouldn't say not know what you're doing, but you don't have your plan in place.
Yeah, or something changes, right? Like you never know. Even to your point, even the best investors will, stuff happens, right?
Yeah.
Like that's why it's called investing.
Yes.
Because it's not guaranteed.
You're taking a chance on it.
Yeah.
Well, I guess, it's kind of where you've led, and we've talked about it before, but what would make a good deal? What would I say, hey, here we are, Jared, we figured it out. We're coming to you. What would a good deal look like?
Yeah. No, that's a great question because like I tell people, anyone who reaches out to me like, hey, I make money when you make money.
Right.
And I know what a good deal looks like because I've wholesaled here. I know all the neighborhoods. I've gone on appointments in almost all of them. Right. So send me your deals. I don't want you to put something under contract and then like for me to be like, oh, dude, come on now.
Yeah.
So I typically look, if you're going to do a fix and flip, I think I classify it as a good deal. If our expected net, like all fees included, you're making 40K profit. That's where I'm like, this is a good deal.
Right. No matter what price point we're at.
Well,
it's a percentage of a.
Right. I'm talking like more entry level, because that's typically the people who are reaching out to me. It's like that
300,000.
Yeah, $300,000 to $400,000 exit. But yeah, once we start getting up there more, or it's a bigger project, you want to see that spread get bigger. Like if somebody's spending $100K on reno, you need to be netting 50.
Right.
Like straight up. And so the one thing that really bothers me, and I'm not going to say like I'm totally guiltless of it, because it's hard to be on top of it sometimes, but lenders just have such a reputation for not showing what everything is going to be.
Right.
So I even had a situation on a closing today where my borrower like didn't see the HUD till today. I had like quoted already, hey, these are estimates on the closing costs. I don't include an insurance estimate because I have no idea where your insurance is going to come in. But she called me today and was like, whoa, what is this like extra money coming from? I thought it was fully funded, yada, yada, yada. And I'm like, no, this is different. So when I like show numbers, when I'm underwriting, I have a background in modeling in Excel. I did that professionally for a little bit.
Wow.
So I love it. And I'm like humbly very good at it.
Right.
So I have like a nice model, and I'll send my borrowers like, hey, this is what I'm getting. These are the comps I'm looking at. This is what your net looks like.
Right.
And it's always going to be less than you think it is, even though I'm trying to capture every cost.
Of course.
So if I'm seeing like, I tell people, look, if it's under 35, like, could I fund it? Yeah. If we can show a net profit of like 20K, I can probably fund it, but I don't want to. If you want me to, I will, but I'm just telling you up front, I don't really like the deal.
Right.
And I'd much rather see you win and get all this extra money so you can do more flips than like struggle through this and whatever.
Well, and you've seen what can go wrong at those levels, and that's why you're trying to protect them. And, we have people, when we're pricing homes, they like, oh, I think it should be so much more. It's like, well, we do this every day for 15 years, every day. And we're looking at comps, we're talking to people, and the market changes every day. So you're in it every day. I mean, you're protecting them, protect yourself, but you're saying, you might want to look at this a different way. Let's find another deal. And from what I've learned with wholesalers, sometimes you got to look at 50 to 100 deals before you get the one that matches the numbers you want.
Yeah.
Because everybody tries to jump into it, and then they wish the P&L better, or profit and loss statement better. Well, if I do this and I don't do that, there's a lot of ifs in there. The more ifs, the more
guilty of it.
Well, I did too. It's crazy.
That's why like one of my best marketing strategies is like when I got into lending, I was like, all right, what do I have that I can bring to the table? And I realized that I had built up all these relationships with good local wholesalers that I actually know that they sell their deals. And I watched them go, like I watched the deals to the finish, and I know the end people are making money on it. So I compile the list of all my local trusted wholesalers, kind of like on this show where you've got your network of local trusted people.
Right.
And when your clients come to you, you're like, hey, watch this episode because I know they're local. I know they're trusted.
They're going to fix your car right. They're going to cut your grass the right way.
You got it. So I almost have that similar setup with wholesalers. Well, I'll have them send me all their deals. I know they're good deals because I've seen their work in the past, and I don't have to go through and comp them all. And I'll just put them out broken down by county in Tampa Bay once a week to my borrowers. And that's just like super, super scalable for me.
Right.
It doesn't matter how many people are on the list. And my borrowers love it because they don't have to look at garbage on the Facebook pages or like if you're in this space, Investor Lift is like traditionally known for being the most overpriced. Like you might as well buy from New Western at that point.
Right.
So yeah, it's great. It's like feeds the local wholesalers who are doing good business that aren't like institutional wholesalers, right? And it's good for my borrowers. It's good for me. It's fun for me too.
Yeah.
I like it.
Well, and we all love success stories. I mean, we all love. I mean, we don't want anybody to fail. I mean, we all like that for people to succeed. Kind of going back to that, and probably something we didn't talk about earlier, but you find yourself obviously like we do educating a lot.
Yeah.
Do you have from what I understand, you do some kind of live shows and stuff like that you're working on, and how do you educate people? I mean, we spend a lot of time educating, and sometimes they don't go with us, sometimes they do, but in the long run they're going to be taken care of the right way. So I would rather see them taking care of what fits for them than necessarily doing something they shouldn't. So how are you I want to say get too caught up into training people too much, but I'm sure there's an aspect to every deal. I guess just going by what you said, you got certain experienced people, and are you happy to take on new inexperienced agents or investors, I guess?
Yeah, man. For me, like I found that I get a lot of my purpose out of service.
Yeah.
And like if somebody's super experienced and they know what they're doing and it's like they just bring me a deal, like that's great because it's honestly a lot less work for me. It's a lot less of like, I didn't know this was that because I didn't walk every single piece of the deal start to finish to someone who's new. So it's honestly way more work to do new borrowers, and they're probably doing less business, but it's also way more rewarding for me to be like I have a couple clients that have just been like, I talked to them. I was like, all right, yeah, they haven't done a deal, but I see them hustling and like comping stuff before they send it to me to look at.
Right.
And like I see them working, and then when they finally get a deal and I can help fund it and like verify this is a good deal, I'm going to put you in touch with XYZ person to help you get this done right. That's just super rewarding for me. And it circles back to like, I don't do hard money lending because I'm trying to find the way for me to make the most money.
Right.
I just do it because it's like, I'm good at it. And I love the aspect of service involved with it.
Yeah. And it's nice we can get paid to do it too. I mean, I mean, it's always fun to do. It's always fun to get paid what you love doing. It doesn't become a real job. I mean, it's always a job, but it's a lot more rewarding, and you set it up to where you can travel. And so right now the rates, the world's crazy. Everybody's got their issues of the world and whatever. People are struggling. We've noticed the market slow down. I was closing maybe 5, 6, 7 deals a month. Now we're closing 2 or 3. Some people are, waiting on the sidelines to see what's going to happen with rates, which now I think it's going to happen later from the traditional way.
Right.
Are the wholesalers and investors still making money in this market? Are they still active, or are they kind of pulled back also?
There's still activity. I think I'm sensing a little bit of pullback. I feel like less wholesaler, like there's more wholesale deals falling through. Buyers are being a little bit more conservative, as they should be, right? They're seeing where the days on market is going. Yeah. And they're seeing how, like the affordability is such a problem. The people who could afford a house, like have already bought their house, right? Because we've been in this stage for a while now. Right. The remaining buyers who are looking are people who like, they just still can't afford it. Right. Or you're in that price point where they're actually buying cash, like that $1 million plus.
And I did 70% cash last year on our deals, So it's pretty crazy in our market. I mean, and we're trying to invest more, and it's why I'm so happy we got to meet with you and discuss this, because we're looking for new avenues. I mean, I can't keep, so just say say we had a $500,000 deal. Is it like a 30%? I have to have my own equity, or 20%, or how's that number kind of work?
Yeah. So, I'll make it really simple. Generally speaking, you can, if you have $100,000 in your bank account, times that by 4. That's the total cost of a project that you should be shopping for.
Okay.
Now that's not your down payment,
right?
But between closing costs, financing fees, insurance, front funding renovation, emergency fund in case stuff goes wrong, like that's where like I feel good about you having success.
Right.
As far as actual down payment, in some states we'll go as low as 10% of the cost down for our most
the full cost of the deal.
Yeah, exactly. So purchase price
plus the ARV
plus renovation.
Renovation. I'm sorry.
Yeah. I was like, that's going to be a lot of money.
That's a different. Yeah.
That's a big number.
Yeah, that's it. Yeah, I got you.
So, in Florida, we're at 85%. So someone would bring 15%. We're working on getting that down.
But this plus origination fees, you have that in the pot, plus your origination fees and everything. Okay.
Yep. So, like, what's going to be standard is you're going to have an origination fee. Every lender that I know of charges a processing fee. Those are the only 2 fees that we have with financing. A lot of lenders will charge like 3, 4, 5 extra little $200 fees, just garbage fees.
Right.
Then you'll get insurance, title fees.
And they can pick their own title companies or everything, or do you have to work through specific people you picked?
No. So if it's a wholesale deal, typically the wholesaler already has
their people.
Yeah, they already have the A to B with a title company.
Right.
So it is where it is, right? Insurance agent, I can make recommendations. Like I've been working with D's Insurance a lot recently. I think they're actually in Sarasota.
I'll have to check. Yeah, I have a couple I've been using, but I don't think I've used them, but again, we have a new connection, and we, Marius and myself here, our partner here in this business, all we do is spend time building relationships. You know, that's what it is, and it's kind of like we're doing here. So anybody that you have, I would love to meet, and we just talked about that earlier before the podcast. But yeah, any way we can help investors, and that was always the big catch, right? Because I was a real estate agent, real estate broker associate. I hang my license with somebody. And when you go to wholesale shows, like, oh, you're a realtor? They're like, what is a realtor doing a wholesale show? Because I'm an investor. Yeah. And I want to know all the way deals are done. I just don't need the traditional 5 or 6 ways that a realtor works with them every day. I want to be able to work with that person that, I can direct them the right way. We can get paid a commission on the close. We can help you find the deals. Yep. Marius, actually, what's great about Marius, he's been doing this for about 2 years now, probably about 2 years, you think? So, and what he does, because he's so good with video, he'll go out to houses that are just rough. Rough. And he'll say, hey, this is what investors look for. He'll do a little Instagram, put that out there, and he'll get calls like, wow, where'd you find that? Where'd you find that? And because we've built our base too, is we talk to a lot of people off market. Yeah. Really talk to a lot of people. I think we did 4 or 5 off market deals last year.
That's awesome.
And that's just for traditional, help people get them, help them with their fees and stuff like that. So, but, I really enjoyed this time. I'm sure you have a lot more to throw out there. Is there any kind of lot of final thoughts you want to kind of throw out there for anybody we can do? Because, this will go on your social media, it'll go on ours, and, anything else that we should know that I missed?
Yeah. I think just generally speaking, if you're looking to get in the investment space, I kind of tell people there's a couple ways to do it, right? If you want a full-time job, be a wholesaler or be a realtor or be do what I'm doing, be a mortgage broker.
Right. So you see it every day.
Yeah, exactly. That's because I talk to people, they're like, I want to get into real estate. I'm like, what do you mean by that? Are you looking to get a new job?
50 different ways, right?
Right. Because there's a couple of things like you'll get a new job. Realtor, full-time job. If you want to find real success with it, right? You want to be a lender? Great. That's a full-time job. And then I'll get people that are like, hey, I just want to make supplemental income. I like my W-2. I've got this money, but I want to make more per year. It's like, great. You should probably be flipping.
Right.
That's the ideal avatar for someone who's I've got several of those clients, right? And then you've got the final person who's like, I'm looking for long-term wealth. That's where it's you need to buy rentals.
Yeah.
And that's where typically I do 30-year DSCRs as well.
Okay.
Typically, I'm going to be beating out any local banks or any, honestly, most mortgage brokers. We've got a really good setup with our 30-year. But those are kind of just generally speaking, for folks that are interested, they're listening in, they're like, how do I get into this space? You need to define your goals first, because flipping is not a good option for a lot of people.
Yeah, you can get hurt really quick.
Mm-hmm. Yeah, and it literally might if someone's like, hey, I want a full-time job, I'm going to be a flipper. I'm like, that is not like,
but I don't know how to drive a hammer and I don't know anything about plumbing.
well, also it's like, okay, well, you're not going to get like $8,000 a month. It's going to be like you have no money at all to your name, and then hopefully you get a big wire back like 6-8 months down the road.
Right.
Like that is not the kind of job that I want.
Yeah.
Like maybe if you can do 3 or 4 of them at a time and you can actually get like a cash cycle going, but that's a tough, like, this is my job. You're like, I don't know if I do that, man.
Yeah. That's so cool that you can, you know, kind of help them through pick that understanding. And it reminds me of what we do. I mean, I've talked people out of deals. I've talked them out of, you know, I want to do Airbnb. I was like, well, do you know the rules here in Sarasota about Airbnb?
Right.
And, well, I see this house down the street doing. I was like, yeah, but you don't want to be caught doing it when you shouldn't be doing it, you know? And, you know, I've had people who's like, you know, well, I'll just try somebody else. It's like, that's great because I'm not going to recommend you do something that, you know, you're going to get in trouble for and you're going to hate me for it. You know, I'd rather have a cup of coffee with you later and just like, yeah, that was a good decision. You know, I'd much prefer that.
Unhappy first and happy later is much better than happy first and unhappy later.
Oh, yes. No doubt. No 100%. Doubt.
100%.
You know, I think because we got so much information from you, I think once we put this out, there will be some comments and things. So I look forward to maybe rescheduling and doing this again.
Yeah.
You know, because you're going to get comments and stuff like that. And we're building this relationship down here. And I think we already have a couple people we can turn you to.
Awesome.
You know, we're our guys here in Sarasota. But, you know, I really appreciate you coming in and thanks for your time. And you drove all the way down from Tampa and dealt with the traffic. So
that's right. Yep. So. And if anybody's tuning in and they want to reach me, I would say the best place to continue to get stuff from me on Hard Money is I'm always on my Instagram. It's at Jared Does Hard Money. Pretty hard to miss that.
And we're going to put those links in the video too. So they'll have access to where they can link right to you. Is there a website or something they should go to? Because they have to go directly to you. They're better going through Instagram and contacting you first?
Yeah. I'd say like I have an apply now link for me, but it's like
generic. Yeah. You want to talk to you.
Yeah. Instagram is by far the best place to reach me. Like I won't miss you if you hit me there.
Okay.
So, yeah.
Okay. Great. Well, I appreciate your time. Thanks for coming in. Man. It's good stuff. We're going to get a lot more from Jared down the road, and I appreciate everybody tuning in. And make sure you comment, leave some remarks. We look forward to handling these questions. Investing is such a big thing. And there's never a bad time to buy real estate. You just got to know what you're doing. So we're here to help. Jared's here to help. And we look forward to seeing